What is the single best value stock to be buying today? I think a stock that is hidden in plain sight right now is MGM Resorts. This is the company that owns about half of the properties on the Las Vegas Strip, or runs half the properties on the Las Vegas Strip. They have 2 casinos in Macau. They have regional casinos all over the US, and then they're building a massive casino in Japan, which they will own 40% of, that could potentially be the most profitable resort in the world when it opens up. But this company is not valued based on those growth projects or even the recovery in Macau, which appears to be taking place right now. And I think the momentum behind this business continues to be really strong. So I'm going to dig into why I like this company so much and why I think the macro environment is both behind MGM and the individual resorts that they have are going to continue to do really well long term. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. So I want to start with just a macro overview of why I like this industry in general. And the biggest thing is that I think we're moving to a world where more of these entertainment and meeting hubs are going to be really important. Fewer people are going to the office. They're working at more remote companies. So what do you do if you're working in that kind of environment? Well, you've got to get together every once in a while, whether that's with coworkers, whether that's with friends. And that's going to draw people to natural entertainment hubs. New York, LA, Miami, Las Vegas. And this is exactly what we've seen coming out of the pandemic. What you might not realize is that Las Vegas gambling numbers were higher in 2021 after the pandemic even just started to end than they ever were prior to. The Las Vegas Strip actually bumped along for over a decade with effectively no growth. There was kind of a swoon there around the Great Recession, and things never really fully recovered. A lot of spending went to things more like nightclubs as opposed to gambling. So the area grew revenue overall, but it wasn't a boom area by any means. And that's one of the reasons that there were really no casinos built between the Great Recession and the pandemic. Now, there have been 2 resorts completed since then, but the industry was just kind of bumping along in Las Vegas. That really started to change in 2021 when people started to need to go out somewhere to meet up, and Las Vegas was the natural place to do that. Gaming recovered. We had a football stadium open there. A Formula One race started, and Las Vegas became the entertainment hub that it's always been once again. The great thing for a company like MGM Resorts is that they had sold most of their real estate for very high prices, primarily to Vici Properties ultimately. So they took that cash flow, reinvested in the business, paid down debt, bought back stock, and they're not spending a bunch of money to build new casinos in Las Vegas. So that spending happened years ago, even decades ago in a lot of cases. So when revenue starts to increase in Las Vegas, because this dynamic is happening where people are spending to go to Las Vegas, spending more on room nights, more on casino floors, there's a ton of operating leverage in the business. That means for every dollar of growth that you have, a disproportionate amount of each dollar goes to the bottom line. So your margins start to increase. Just look at that in this chart. You can see that revenue is in the gold column. Revenue is up pretty sharply, about $2.5 billion from before the pandemic, but a vast majority of that is flowing to the bottom line, here judged by adjusted EBITDA. That is up about $1.5 billion. Margins are up over the same period of time. So what you're having is a ton of operating leverage in Las Vegas. The same has not happened quite yet in Macau. And the biggest reason for that is there's restrictions in China on traveling related to COVID and on traveling that ended at the end of 2022 and beginning of 2023. So the recovery that started to happen in the US kind of early in 2021 didn't happen in China until 2023, basically 2 years later. You can see that in this chart. Revenue starts to recover in 2023, and you start to have higher EBITDA than you had before the pandemic. But we still haven't overshot in Macau the way that we have in the US. And I think that could potentially happen. The early numbers for 2024, they give out gaming numbers on a monthly basis, just a day or two after the month ends. And the numbers look really positive for Macau over the last few months. So I think we could see an increase in cash flow coming out of Macau as that area starts to overshoot as well. And again, this is a space-constrained environment. There are not new casinos being built in Macau because the government limits how many casinos you can have there. So you have a ton of operating leverage in the business. So you see where this is going. On a trailing basis, the price of about 10 times free cash flow for MGM Resorts, if there's a recovery in Macau, this is where a ton of cash is coming from for the company. In the future, that multiple could be even lower. So what are they doing with that cash? Well, they're buying back stock. Management went over this on the last conference call, and basically one of the reasons that they started buying back stock was when they started selling most of their resorts. They had excess cash. You can only pay down debt to a certain point, or at least financially it only makes sense to. So you start to buy back stock. And management made the case on the most recent conference call that the stock is actually really cheap. So they're going to continue allocating capital to this because it's the best thing to do with their money right now. Once you start to pull out things that aren't necessarily in the financial statements, like the value of their ownership of those Macau casinos, that's a 6% ownership stake. It's a publicly traded company. So you can take your enterprise value in the US, subtract that valuation, subtract the valuation of BetMGM, which again is a 50-50 partnership, and any sort of profits from that aren't really allocated here because that's not a profitable business yet. You pull that out, and then you get to a mid-single digits enterprise value to property EBITDA, which again is a proxy for the cash flow that's coming from resorts. And that's what management is saying, is that if we're going to buy back our stock at 4 or 5 times enterprise value to property EBITDA, that's a phenomenal use of our cash. And there's not a lot of leverage for this business at this point. There's a little over $6 billion worth of debt, but there's about $3 billion worth of cash. Management says they need about $2 billion worth of cash to operate the business. So you take that other $1 billion, you either buy back stock or you pay down a little bit of debt. But you want to have a little bit of leverage typically in the casino business because of all the cash flow that's coming in. It's cheaper to borrow money than it is to raise equity financing. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So you add all of these things together, and I think MGM is in a phenomenal position from a valuation perspective. Investors are getting the company for about 10 times free cash flow. If you pull out some of their other operations, you could argue that the stock is even cheaper than that, as management has. I think those operations are going to be extremely steady because the markets that they're operating in are regulated. Supply is not increasing in any sort of meaningful way, but we may see revenue increase as more and more people are traveling and going to these entertainment hubs. So I think that's really bullish long term. And then you have things that aren't really priced into the business. There are some properties built in the UAE that may or may not add gambling. There is the casino being built in Japan, which again could be an extremely profitable casino when it's finished in about 2030. And in the meantime, management is just going to continue to either pay down debt or buy back stock. And I think that's a phenomenal position for the company to be in. This is not nearly the risky company that it was before the financial crisis when there was a ton of debt on the balance sheet. The operating leverage that we see today just simply wasn't there. If we do hit some sort of hiccup from an economic standpoint, this is a company with both the balance sheet and the operations to be able to withstand all of that. And I think that's a phenomenal position to be in. So this is a stock that I have been buying recently. I will probably add more in the near future because I think it's just such a great value with a lot of macro tailwinds and also MGM specific tailwinds like that property in Japan, which I think could be phenomenal for the company. But what do you think about MGM Resorts? Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.